Hello investors and traders, today I'll speak about the stock market, the economy, recession, inflation, all the risks now in the economy and of course my view for the market to this year. So let's start firstly as usual with the S&P 500 index. So now we see it's traded near the 4,000 level, and as I told previously, we have a decreasing channel. Now most probably here finish the wave 4, and I'm expecting to see it a little bit lower, that this pattern will finish with the fifth wave. So generally speaking, now I'm not buying new stocks, new value stocks. I am hold a portfolio of bonds and of course dividend stocks. The Nasdaq is the same actually. It showed a nice performance since the beginning of the year, so we can check it since the beginning of the year. Let me see, the Nasdaq is up about 8%. Here also now the main data, the main event, I think it will be the 14th of February. There will be released the data of US inflation, and after this I think the market will choose to do which direction it will move ahead. The next one is the TLT, the US 20-year bond ETF. So here it's continue to trade at levels of 100. I think it can be a very interesting idea for this year, one of the safest asset in the whole market. So I'm continue to hold this, of course, this stock and of course this asset in my portfolio. And if we will see another turn in the stock market and our market crash, of course this ETF will and can show a very nice performance. Let's have a look on this picture. We see that the level of debt to GDP of US economy ratio is continue to grow, and now it's about 120%. The ratio has exceeded 100 since 2015, and the ratio has fallen since early pandemic spike, but still for the last I guess 50 years it's still continue to be very elevated. We see it's here it was the levels of 16, 17, even 18%, but now it's really the ratio of debt to GDP is higher than 100, and I think it can be a problem for the markets. It can be an issue, so the level of debt is really very high. Let's move to the next picture. We can see that the most aggressive Fed hiking cycle in 4 decades, and we see here this level that in 8 months the Fed is raised it, hiked interest rate more than 4%. So very sharp increasing, very aggressive one, the most aggressive for the last really for the last 40 years. That's why it's showing that the Fed trying to cause a recession. So you will see that the figures, the data in the job market is now is very high. The unemployment rate in the US very low for the last time. Of course, it's a problem, it's an issue, because the salaries, the wages very high. The inflation continue to come down, but still we see that the Fed trying to restart the economy with such aggressive Fed funds increasing, of course. The next one is the DXY, the US dollar. We can see that in spite the interest rate hiking, we see the dollar is weakening for the last quarters. So generally speaking, now it's a little bit higher than 100, and my projection towards the end of the year that we shall see the US dollar a little bit lower, maybe not 100, but maybe 95, 94. I see this the US currency at the end towards the end of this this year. The VIX, the index volatility, we see that now today it's growing 4%, but actually nothing special happening in the stock market. Now it's still very, very low. We saw it was elevated at the pandemic. It was the levels higher than 80, so it's very, very high, but then it's come down, and now it's only 21, so it's really very low. So of course the everybody, I guess, expecting the new data release of inflation in the next week. The US bond yield, the 2-year yield is about 4.5%. Now the Fed fund rate is 4.75, so it's very close. So here also it's traded very close to the US Treasury, to the US Fed fund. And let's move to another interesting picture. Here we see that the composite container fracht rate, the benchmark rate for 40 feet box. So we can see the containers market, the transportation markets, its highest level. It was a few years ago higher. Please, it's very important. So here, look at the chart. It was higher than $10,000, and now it's about only $2,000. So it's decreased dramatically, of course. All the companies, container transportation, fracht transportation, I think it's not the best time for them. For example, we have such company here, it's Hapag-Lloyd, and generally speaking, let me check. We can see so that it's very correlated to this chart. So the pandemic, of course, the pandemic time, it was 2020. Yeah, we saw a spike. It's shows performance more than 800%, and now it's a correctional one, ABC move. So now it's a correction. We see, so it's very very sensitive to the fracht rates. So now I think it's very tough time for them, but anyway, I'm not investing in this area. And now let's have talk about one company. It's Alteryx. It's one interesting company for me now. It's IT US company. It's working the sector of artificial intelligence. Now it's down more than 50% since its high levels, and yesterday it released its quarterly report, and now it's up about 40%. So let's have a look on its report previously. So we see that the EPS, non-GAAP EPS in this quarter was about $1. It's higher than expectations. Also the revenue year to year is up more than 70%. It's also higher than the expectations, and the company earned about $300 per quarter. And of course the quarter finished with such a parameter like annual recurring revenue is about 1 billion, and it's more than 30% higher than year-to-year data. And of course the net expansion ratio is about also higher than 100% at the last quarter. And if we will look at the projections, the expectations for the next quarter, the company is saying that the revenue will they're expecting to see about $200, and it still will show a nice growth year to year, about 25%. And this parameter, annual recurring revenue, will be at the levels of $800, and in this case it's also the temp there will be the CAGR about 25% grow. So generally we see a nice artificial intelligence company, nice quarter, nice projections. It's down more than 50%, and if we look more closely to the chart, so here look, we have a trend line level, the white one, and of course now it's bounce. It's by the way, like some kind of a support line. It was the first one, the second, the third, the fourth, and the fifth, and now they get to this general support level. It's about $68. If we break this level, of course it can be a nice signal to buy. Just look at this level of $70. If the company break it, it of course can be lower. If we'll check the monthly time frame, so please pay attention that it's about 50, so it can still can be a nice opportunity to buy, nice level to buy this stock. The company, of course, not paying dividends, Alteryx, but its market cap about $5 billion. And we can see that, of course, it was a tough time. The coronavirus or the pandemic period was very tough for the company, but last 3 quarters we see that the margin improving, and also its revenue is really continue to grow quarter to quarter. So it's a very nice and good dynamics. So generally speaking, nice projections, very cheap valuation. Let's check the PS ratio, price per share. Historically it was 20, 12, 6. Now it's lower than 7. So we see that the evaluation price per share is not expensive at all. And by the way, it can be a target for M&A deal. It can be a target for buying. Maybe some big or a huge company can buy it, because for some companies like Google or Apple or maybe Meta, $5 billion it nothing, because the such company like Apple spends billions of bucks just for buyback its shares quarterly. So I think maybe Alteryx can be a nice target for them. So generally speaking, it's my opinion and my views on the US market for the next weeks, for the next months. If you like my channel, if you like the video, so of course press the like button. Don't forget to subscribe to my channel, and see you on the next time. Bye.